So this setup, which I'm going to cover now, is called the rejection setup. It's also a volume-based setup, so it's also based on the volume profile combined with the price action. And the rejection setup is based on the strong rejections, which you see on the price action. Strong rejection means, for example, this. This is strong rejection of higher prices. If you see this, then this is strong rejection of lower prices. Aggressive rejection like that is also a strong high or strong low. So this is a strong high and this is a strong low. And what aggressive rejection means is basically the chart is telling you that either aggressive buyers are rejecting lower prices. This is aggressive buyers rejecting lower prices and pushing the price upwards, or aggressive sellers rejecting higher prices. This is aggressive sellers, those sellers rejecting higher prices. The important thing here is the aggression. The movement needs to be swift and the rejection must be really nicely visible. Alright, this is how it needs to look like. There is no specific candle pattern to this, so it can be one candle, for example pin bar, but it doesn't need to be pin bar. The important thing here is the aggressivity, how the price turned. So there is no specific candle pattern. So for example, if you look on a 30-minute chart, then the rejection could look, for example, like this. If you look at 5-minute chart, then the same rejection could look, for example, like this. Alright? In both cases, it is a strong rejection of higher prices, aggressive rejection and change of price movement. But there's no one specific candle pattern which will define the rejection. But the important thing we look for is the aggressivity. Alright? The core of this setup is basically you want to identify the volume cluster which got created within the rejection. So if there is rejection of higher prices, indicating strong and aggressive sellers, then you want to look inside the rejection and search for a significant volume cluster within the rejection. And where there is a significant volume cluster, this means that this is a place where most of the action took place. So for example, in this rejection, if there was a volume cluster in here, so the volume profile looked, for example, like this. I mean the volume profile for this area, alright? Then this would be the place where most action took place and where the sellers who rejected higher prices placed most of their positions. So this is the most important place in the whole rejection. So let's now have a look at specific steps in this trading setup. The first step is you look for a strong rejection of higher or lower prices. So in this picture, in this case, there is strong rejection of lower prices. This is what you look for. Afterwards, as I already said, you identify the heaviest volume cluster within the rejection. So if you look at the picture, then this is the heaviest volume cluster within the rejection, within this rejection area. Alright? And from the heaviest volume peak, you draw a line. Heaviest volume peak is in here, so you draw a line from there. And when the price makes it back to the level again, when there is a pullback to the significant volume cluster, you enter your trade, which will be in the direction of the strong rejection. So this is rejection of lower prices. And for that reason, you'll be entering a long from there, because strong buyers rejected lower prices, which means that in this place, strong buyers placed a lot of their buying positions, and from there they aggressively started buying. So when the price makes it back to this level, those buyers are likely to defend their volumes, to defend their positions, and to push the price upwards again from this level. So that's why you go long from there. You don't need to wait for any sort of confirmation, you just enter at first touch. Alright? You use the flexible profile on the rejection area. So as in the picture, this is the rejection area. This is where you use the volume profile. You are interested only in the volumes within the rejection. And the very important thing here is if there is no significant volume cluster within the rejection, then you don't take the trade. So if you don't see anything like this, if you don't see any significant volume cluster, then there's no trade. One more example of the same setup. This time there were aggressive sellers rejecting higher prices, pushing the price downwards. Now within the rejection area, the heaviest volume cluster was this one, and heaviest volumes are right there. So you draw a line, you wait for a pullback, and when the price hits the level, you enter a short. No need to wait for any sort of confirmation. Alright, so that's short trade scenario. Now here are some final points before we go in the charts. So the first point is what I actually like about the rejection setup. It is that you trade in all trading conditions. So you can trade in line with a trend. You can also trade the rejection setup counter trend. And also you can trade the rejection setup in a rotation. So when you trade the rejection setup in line with a trend, means that there is a strong trend, let's say an uptrend. Then there is aggressive rejection of lower prices, and then the price continues. So this is exactly what I mean by that you can trade in the line with a trend, because you just wait for the price to make it to significant volume cluster, and you enter long from there, which is in line with the current uptrend. So this is trading in line with a trend. Counter trend would mean that there was a downtrend, aggressive rejection of lower prices, then you would wait for the pullback to the significant volume cluster, and you would go long from there. So you would go counter the trend. Alright, so this is counter trend situation, and you can also trade the rejection in a rotation. So when there is a rotation and there is, for example, a rejection of higher prices, then you enter your short in here from the place where the volumes were the heaviest, short like that. Or if there is a rejection of lower prices in the rotation, like this, then you go long from there. Alright, so this is a big advantage of the rejection setup. Then you can trade it in all market conditions, rotation, trend or counter trend. Now another thing is that some markets work better than others with the rejection setup. So for example, euro dollar, that's my favorite. The rejection setup works pretty nicely in here, but on some other charts, the rejection setup may not work as well as on the euro dollar, especially when you trade intraday. If you trade, for example, swing trades with daily candles, then the rejection setup will work better on all trading instruments. But when you trade intraday, then I found out that some markets work better than others. The best market to trade the rejection setup, in my opinion, is the euro dollar. Also, the rejection setup is harder to spot than, for example, the volume accumulation setup or the trend setup. Those are the two setups I already talked about. This one is harder to spot because it's harder to tell whether the rejection is significant, whether it's strong one, or whether it's not really that significant. So it takes some practice, it's not that easy to tell. My suggestion is you first master the volume accumulation setup and the trend setup, and only after that you go to the rejection setup, alright? Because it's the hardest of those three. So that's it for the theory for the rejection setup, and in the next video we'll go into real charts and I'll show you how the rejection setup works and how it looks like.